This is News Talk 980 CKNW.
Welcome back. You know what? Toronto has taken over from Vancouver as the hottest high-end real estate market in the country right now. And I say, yeah, go ahead and have it. But really, should Toronto be sending a thank you note to BC's provincial government?
And meanwhile, the on-again, off-again supply cuts in crude oil have analysts wondering if the crude rally can be sustained, and with it, a needed boost to the Canadian economy. With more on this, let's bring in Michael Campbell. He's the host of Canada's top-rated financial show, Saturday mornings on CKNW. It's Money Talks.
All right, Michael, let's start with the changing of the guard in this high-end of the real estate market. Today, Sotheby's actually became the latest firm to predict again that Toronto is in fact going to lead the way.
Yeah, absolutely. Now, it's dangerous to state why individuals are buying, but you know what? It's not a big stretch to think that one of the consequences of the 15% foreign buyers tax would be that simply money would go elsewhere. I think Victoria has seen a little bit of that money, but Toronto is the main beneficiary. If they wanted their money in Canada, Toronto is the top of the list. I mean, it's the financial and business capital of the country. It already was attracting foreign interest, but I suspect then you get that big drop in Vancouver, and yeah, I think some of that money, I bet, has ended up in Toronto. And that sort of BC tax just added more fuel to that capital going there. I mean, the money still is looking for safety. And I think Toronto and Canada is a top destination. Toronto became our top one.
What about the implementation of Vancouver's vacant homeowner tax? Is that likely to change the picture here at all?
Yeah, I think, again, it's just one more kind of log on that fire. I mean, we have also those mortgage rules changes. British Columbia added a tax in last February that was an extra bit to the property purchase tax for homes over $2 million. So you start getting this recipe, and I think it has clearly slowed down the market. I mean, clearly there's been implications that way, especially in the single detached. But I think there's a big point here, Drex, that we've got to start understanding, and that, big government advocates don't seem to get it. And that when you raise taxes, it's not the same thing as increasing government revenue. And the reason is really straightforward. I mean, capital is mobile. We made it less attractive to put some investment dollars or buy at the high end in Vancouver. Well, that money's moved. It's moved to Toronto. It moved to Seattle. I mean, Zillow just said that Seattle's going to be 1-2 again in the U.S. It's been very strong so far. But, as I said, Victoria might be, I hope maybe Calgary gets a break, but they're doing some stuff that makes it less attractive. Some of their property tax issues, that kind of stuff. But the point is this. We got so many examples. In the 1990s, BC had an unattractive business climate. Presto, that actually rescued Alberta and it rescued Calgary from $9 oil, $10 oil. Why? Because we had this exodus of head offices going to where there was a better deal. And it's not a political statement that I'm making here because everyone, left, right, and center, has acknowledged this at least when it suits them. Why did, the NDP introduced film tax credits? Why? To attract capital here. You've got that same with conservatives. You've got that same with liberals. All across the spectrum, when it suits them, they kind of get that when you lower the price of something, it becomes more attractive. When you raise it, it becomes less attractive. Right now, that's one of the big rationales behind the carbon tax, rather, in Alberta. They're saying it's going to make gas less attractive. People will substitute then, change their behavior. That's my whole point. Behavior changes when you change cost structures. We've all bought something on sale, and we better start getting that clearer. And it translates this way economically, that raising taxes is not the same thing as increasing government revenue.
Well, you talk about gas. Let's talk about oil for a second, because the big news coming into the end of the year were production cuts by OPEC and some non-OPEC nations, and the market reacted positively, but now we're hearing stories that suggest there might be some cheating.
Yeah, I mean, today alone, we got, is Saudi producing more? Are they not? They explain why their production was up. But this was always the problem, is there going to get cheating? But I'm interested in how skittish the market is. I mean, one rumor comes out and the market goes down or it goes up, that kind of stuff. And as I say, today was just the latest example. But yeah, that market seems to be very, very keyed on specific news events that come out. And I think there's a heck of a lot of trading going on there, a lot of speculating going on in that marketplace. So yeah, that's what's happening, is that we're just watching those production numbers coming out and seeing what happens.
So what's your take on where the prices are going on that?
Well, I think one of the keys we talked about a while ago was, if they cut their production, will somebody else pick it up? Canada's not involved in that OPEC or even the non-OPEC nations. There's the U.S., and lo and behold, we get U.S. production numbers today, and they're going up, and I think significantly over 2016. So do they rush in and fill that void? We know that supply is still out there. Why? Because there's still big bids on storage going on right now. So I think there's still a lot of work to be done in that marketplace, and my guess is that you're going to see some weakness in that market, and then it will stabilize at much better prices than it did a year ago. But we're still going to get that volatility. I would look, for example, personally, this is my own personal take, if we got another dip in the oil price, I would be a buyer at that point. Then let me I don't want to just keep going on, but there is still one other thing here, and that is, keep in mind, the prices are measured in U.S. dollars. I think the U.S. dollar is getting stronger. So again, that can make it seem like those prices aren't going as high. But in Canadian dollar terms, my bet is that the low's probably in at this point.
So what's the bottom line then? Are the higher prices actually good or bad for Canada?
Well, it's interesting because it's good for consumers, obviously. We like lower prices. And by the way, I've got to mention, though, that keep in mind that government through taxation is the biggest winner any time we get the crude prices going up. Why? Because they make more than the producers, and they make more than the refiners, and they make more than your local gas station on that one through various levels of taxation. But for consumers, lower prices are generally better. But for the economy, I think we've seen over the last couple of years, why has the Canadian economy had such trouble? Why is it, that sort of dismal 1.1% growth and those kind of numbers they throw out? Well, it's principally because of the drop in oil prices, which then reduced capital investment, which reduced sort of the business activity there, and it reduces our exports. So I think it's one of, it's both answers. It's one for consumers, it's good news, but for the economy, lower prices are good news. For the economy, we'd rather higher prices.
So a higher price is good or bad for Canada at the end of the day?
It's good for the economy. But as I sit home, I'd rather pay less at the gas pump.
Me too. All right, Michael Campbell, thanks so much for joining us.
My pleasure.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.